Good morning. It's Tuesday, January 18th, 2022. I am Lindsay Duff, and this is Responsible Day Trading. It has been quite a week already. I haven't really been able to do much trading for a little bit. I've done a little bit here and there. It's just been a very busy week, and sometimes making the recordings for these takes quite some time. I am going to commit to making those recordings so I can have them in the vault, not necessarily for YouTube, but we have a plan for YouTube. We're going to start doing some education for y'all here. Start teaching you some things that you may not know, or maybe give you a different perspective on things you already do know. So that'll be Jason and I both doing it. A lot of it's going to be Jason because he's going to be stepping in and really showing you his role as coach here at Responsible Day Trading, which we are so happy to have him here. So let's go ahead and check out this market. First things first, we know we always want to check out the news and see what we got going on here. So if you head over to responsibledaytrading.com, drop down the news, go to market news, you'll see calendar and market news. Yesterday was a holiday all day. Today, news comes out in 30 minutes. And then Thursday, we got a lot going on, but Friday, nada. So Thursday, we got some pre-market. We got 9 o'clock and 10 o'clock. So it could be a really interesting day on Thursday. If you want to see some different impact news, if you want to look at a little bit lower impact news, you can just come up here to the filters and change it to whatever you prefer. So let's go ahead and see what we got going on in the market today. Here we've got the daily chart. So I've gone ahead and moved a little bit of these, and we're going to actually move this up because I want to talk a little bit about what happened here. It was outside, and we'll talk about why for that. All right, so we saw this nice big reversal bar as it pulled down towards the area. It popped back up, and this is all that happened in the MACDs. Guys, we've got some major retracement divergence going on there. It's the ultimate retracement divergence. If you've taken my course, you know what ultimate retracement divergence is. It happens here, it happens here, it happens here. It's when they get that roll outside of the Bollinger Bands and can't even pull back in. It tells us this is pulling back down. So it pulled back down towards the area, and here's what we see going on in the MACDs. Now, there's a couple of different scenarios that could be happening here. What we see typically happen is the pullback, come back up, pull back just a little bit lower, and then make that little bit of a W pivot almost, or those head and shoulders, and pull back up here. I'm not 100% sure. Well, I'm never 100% sure, but I'm not 100% sure that we're going to see that happening here. And here is why. We've gotten these pullbacks happening several times back here. We don't see a whole bunch of deep pullbacks happening typically when it pulls back into these areas. So this tells me we may see something a bit deeper. Now, what do I mean by a bit deeper? Well, we've got a couple of scenarios here. So I'm going to pull this here so we can see it much more closely. The deepest pullback that happened was right in here, right? So if we're looking for it to equal that pullback, it'd probably be back in this area. So the first area to pull back to is where we held up previously. So we're on our way down there. The MACDs look like they're really trying to push down to pull us down there a little bit further. They're not even starting to lighten up yet, kind of like they did here. So we may see something more along the lines of what happened back in here, where we see it pull down deeper, make it a little bit further. Where's my arrow line? Where are you? Arrow line, there you are. Pull down a little bit further down to this area, and then possibly see it bounce up. Maybe even something to where we get a little bit of a head and shoulders using the pivot here, here, and here, and pull back up. Or what we may see, which is another huge possibility in seeing what's happening here. And I want to make sure I grab these off. What we may see happen here is it pull down even further. Well, where's our next few stops? First off, right in this area would be right about the top of the area here. Or we may even see this pull all the way back down to the last major area that has held. And that was where we couldn't break through here for quite some time, pulled back and came back in. I see it happened here. held, pulled up, came right back to that area, okay? So if it continues, we'll expect it to continue down much further. That's just looking at the biggest overall what can happen, not necessarily in just today, but over the next couple of weeks, next couple of days. So let's go ahead and pull up the 28,657, which we've got right here, and talk about what's happening more in the immediate and what we can expect to happen throughout there. So in the immediate, we can see that it pulled almost down to that previous pivot point. Didn't quite make it. This was a couple of days ago, right? So it pulls up. We equaled that previous pivot point. MACDs were leading just 90 miles lower as we equaled that previous pivot point, which told us that this was going to push down. We see a lot of nice retracement divergences happening in it here as it's pulling back into the area to tell us that it was going to continue down. As this was looking like it was going to push back down, the MACDs really struggled to come down and equal or exceed this previous pivot period, which said, hey, it's going to pull back up. So it gave us a nice big pull back up into the EMAs area, held out there for a little bit and pushed right back down towards that previous spot that we were talking about on the daily chart. Now, what we have seen here is a little bit different. Nice big reversal bar off of the area. MACDs are still outside of the Bollinger Bands. So I would start referencing my smaller charts to see, well, is this anticipated to roll back in, pull back up? So what we may see is it pull back up towards the EMA area. I don't know if we're going to quite make it there. What we may see is pull right back into right in this area. If this does have a big push up, we're going to anticipate seeing these MACDs roll inside and do all the work they need to do to get back above this particular Bollinger Band to say, hey, we've shifted the direction back to the upside, got back above the EMAs, got back above the zero line, and we'll be looking for a little more up. That looks like it's going to be a lot of work, especially since this pullback that's happened, these MACDs are still outside of the Bollinger Bands. They're starting to lighten up, they're starting to slow down. But we may see what happened here or what's happening here exactly like what happened here with this little bit of a pullback and push back down. So we may see a little bit of a pullback here and continuation in that direction. Even though the MACDs are leading higher in these areas as we've reached this lower pivot, it doesn't mean that we can't see it continue down a little bit more. Maybe down toward that 16 area on the 28,657, which would still be higher than the last pivot, but may get us a little bit lower than this last pivot in the price. And I say higher in the last pivot in the MACDs, but maybe lower than this last pivot in the price. Because for continuation, we do want to see it continue to make these new lows. Well, let's come into another thought process here too. This low right here is one of our extreme lows. So it's going to take a lot of work to get these MACDs back down below. So I'm anticipating this to at least give us a little bit of a push back up before it does anything to roll down. And I'm very hard pressed for me to think about it going much further than here. So maybe down to that next box. Where the MACDs can get down back towards that extreme area and then pop back off of it, because that's kind of like our last stop area there. So let's look at what is happening currently in our 3 trading charts. Now, something I want to explain to you here, guys, is I'm using the 10,946, the 1597, and the 233. If you wanted to use something a little bit different, you could have the 610 placed here, and you could have the 4181 placed right here. So if the 4181 is placed right here and the 610 is placed on the other side, what this does is it brings it in a little bit. Brings it in a scotch, as one of my friends would like to say. So now we've got the yellow EMA represented here and here. We've got the blue EMA represented here and here. So we we always want to connect these charts and tie them together so that it makes them more synergistic. It makes them flow together much better. But if you want to spread it out a little bit and look at a little bigger spot and a little smaller spot, all of the EMAs are now represented here. Because previously you could see we had this pink and this purple one. Well, if we bring that 610 chart back up, you can see we've got the pink one represented right here. So it's kind of like that next step, or we can skip a Fibonacci number and still have all of our EMAs represented. And those are really big to me. And this is why I use these charts. This is why I put them together as such, so we can really work together to have them flow together and have a really good synergy is the only word I think to use. Just a connection between the charts. Because if you don't have connection in the numbers that you're using in the charts, then they're just kind of thrown together and you're wondering why it's not working. So very specific on using Fibonacci numbers and connecting these charts together, okay? So there's a little lesson on Fibonacci and how we connect these charts through the EMAs. I mean, and just to take this one little step further, if I bring back up my 4181 chart again, you can see here on the 4181, this EMA is represented right here, and this EMA is represented right here. So if I had the 4181 out here, then we've got them already connected through the charts by their immediate connection. If we take this out, it's almost like skipping a generation, but still connected. I think of these as generational charts. So yeah, all right, cool. So that's gonna wrap that little bit of a lesson up there on Fibonacci's, and maybe I'll do a little bit more in-depth lesson when we start putting out some more educational videos. Okay, so let's come down to the next three charts in my playbook. So the 10946, the 1597, the 233. The 1597 is my trading chart. Whatever chart I have in the middle, that is the one that I'm trading. My 1597 right now looks like it's trying to pull back just a little bit. Now we can see the 10946, which is my big granddaddy chart, has given us what we look at as a potential snapback. It pulled really, really far away from the EMAs, created some reversal bars, and is looking like it's going to pull back. These MACDs are going to be the teller. Are they going to roll inside of the Bollinger Bands and continue down? Or are they going to continue up, get to this top Bollinger Band, cross it, and show us the potential to continue back up? This chart also is showing us how we have reached some extreme levels in the MACDs. When we get out to these extreme levels, then it's kind of hard to see them going much further than that. We don't have a lot further to go with these extreme levels. I don't have this back enough days to go any further than that, but you can see this is about our extreme when we pull really far away from the zero line. We see that extreme when we pull really far away from the zero line, and we see it when we pull really far away from the EMAs. They have kind of the same effect. We expect it to come back to them. So we're going to expect this to come back. I think we're going to see it come back just a little bit more, especially in the way that we're having a very weak reaction to the downside in our trading chart. We haven't really even broken side of the Bollinger Bands. It's attempting to, but we haven't quite done it. So the next thing that may happen is seeing these roll down, pull back down, maybe make us a little bit of a floor here with the MACDs, see the price come back down, maybe even see the MACDs struggle to come down so that we see a little bit of divergence for it to possibly push back up. Currently, when I'm looking at my 1597, I'm seeing that our direction is down. We are below the EMAs. We have broken above the zero line, but we haven't broken above the EMAs. So we're going to need to see this get back above, pull away from the EMAs like we see happening here and here in order to anticipate this to continue up. If I'm looking at my 233, the immediate is saying down as we're pulling away. So maybe see it pull back down towards this next EMA and pop up. Now you hear me say a lot of maybes. Maybe it's going to do this. Maybe it's going to do that. And that's how we have to think as we're looking through the market. We have to anticipate what could happen and be prepared for the other option. So if it decides to go the other way, we don't want to hold on to a trade forever just because in our mind we told us this is supposed to work. We need to look and say, okay, initially, this is what it said it should do, but things have maybe changed since then. Pay attention to what the MACDs, pay attention to what your price, pay attention to what your indicators, if you're not using the MACDs or the EMAs, what are they telling you? Are they telling you that it's shifted, that it's changed, that you need to shift your mindset along with that? Because one of our biggest problems is not shifting our mindset when the market shifts. And then we're constantly trying to make the market do what we want it to do because we haven't changed with the market. And if we don't change with the market, then we're dead in the water, guys, because we're going to be stuck in that same space trying to force the market to do what we want it to do. And you know how much that works? Big fat zero. That will most definitely have you continually taking yourself out of the game if you're trying to make the market do what you want it to do. So as always, listen to what the market has to tell you, pay attention. If it changes, if it shifts, be prepared to shift with it, because the market's going to do what it wants to do and you're going to be stuck sitting on the sidelines if you can't change with it. All right. Well, that's all I've got for you today, guys. I hope that everybody has a wonderful week. And as always, you know that I look forward to catching you on the profitable side.